Hello value investors, thank you for joining me. Today I want to talk about BlackBerry's fiscal 21 first quarter results. They just reported last night, and if you're new to the channel, please subscribe now so you can get my next value installment. Also, if you're interested, come over to my marketplace and check out which stocks I own and why. Marketplace is on Seeking Alpha, deep value returns. So let's get started. What is interesting here, so this is going back to Q4 of 2020, and you can see on this side here that it has three segments. It's Internet of Things, Silence, and Licensing. So Silence was that acquisition that BlackBerry made for $1.4 billion, and I've been a vocal bear on this acquisition. I have no position in BlackBerry, but I have noted that BlackBerry overpaid for Silence. This quarter, you can see there's only two reportable segments. So Silence has been amalgamated into this segment here. And its licensing segment is a high margin royalty fee. Now, in this quarter specifically, it's QNX, which is essentially royalty fees from the auto industry, have actually come down. Can you see here? So it was 58 million of revenue versus 79 million in the same period a year ago. So John Chen, the CEO of BlackBerry, notes, which is true, that the auto industry has basically been shut down during the COVID crisis, and that's why this segment performed quite badly. And this is not shown here, but this is part of the reason. If you have a very high margin business that comes down, this is why its gross margin for Q1 was down approximately 250 basis points compared to the same period a year ago. So in other words, its gross margin came down, and John Chen is saying that this is basically down to shelter in place, and that this should bounce back as the economy reopens, and he talks about stabilization already in the performance of QNX. Moving on, you can see that BlackBerry's bullish thesis very much comes down to it having a very strong cash position. You can see it has just shy of $1 billion between its cash and its cash equivalents, and if you include its long-term investments. On the other hand, it does have these debentures, so this is debt essentially, so its net cash position comes down to 350 million. Looking ahead for the end of the year, BlackBerry notes that it will be non-GAAP profitable. It may be non-GAAP profitable, but it should be free cash flow positive. Now, I don't know whether that includes its pesky costs that sometimes it adds back because of restructuring, even on a cash basis. But at this moment in time, it will be quite a ramp up for the latter parts of its fiscal 21. And I don't even know if that would include its acquisition of intangibles and any other bits that it may add into its capex. But even if it does become free cash flow positive, it's still a company that is just a former shadow of itself, and paying $3 billion market cap for a company that may or may not accurately deploy its 350 million of net cash position, may or may not grow profitably over the next couple of years, is a large premium. So I'm not so sure that BlackBerry's management are good capital allocators. I already spoke about Silence, that they put down 1.4 billion for a company that is not really growing that much, although the cybersecurity space is very, very attractive at the moment, and you can see that in that space you can see CrowdStrike, and you can see that Cisco's making moves over there. So it is a place that should work quite positively. It should provide quite a lot of tailwinds, particularly with the onset of 5G. There's going to be a lot of potential for cybersecurity market growing and expanding, but at this moment in time, it appears that Silence is not really benefiting from those tailwinds. So on balance, I do question whether investors are getting a good bargain here. And as always, I hope you found this video useful. Come over to my marketplace on deep value returns, on Seeking Alpha, and I hope you subscribe. I'll see you soon. Bye.